So, managing risk for your business. First of all, um, the information contained in this presentation is not intended to provide a complete list of the insurance products, coverages, an organization should have. It is intended to provide information to aid the organization in a conversation with a licensed professional insurance agent. And then finally, be sure to consult a professional licensed insurance agent to discuss your insurance needs. Now, on this next slide, I'm going to let that sit for a while and let it marinate, if you will. You don't have to be at fault to be sued. Like I said, I'm going to let that marinate for a moment. You don't have to be at fault to be sued. Part two, defending yourself in court can be expensive, whether you're at fault or not. So let's talk about, well, what is risk? Risk is a situation where there's an exposure to financial loss. It's also defined as a condition in which there's the possibility of an adverse deviation from a desired outcome that is expected or hoped for. And you're probably saying, what in the world does that mean? Well, think of it in these terms. You get in your automobile, you get on the road, your desired outcome is to get to your destination safely. However, a deviation might be getting into an accident. And when there's an accident, there's always some financial loss, damage to property, physical injury, loss of income, loss of work, all sorts of things. And all of those things would have to be compensated for if you are at fault. So, risk management is the process by which strategies are used to prevent or reduce that financial loss exposure. So, how does insurance limit risk? First of all, insurance is a contract between the insurer, which is the insurance company, and the insured, which is you, to cover certain potential losses. Insurance is a mechanism of transferring or shifting risk from one person to another. So, thinking about that automobile accident, if you are at fault in causing the accident, you are responsible. However, when you bought that insurance policy, you transferred that risk from yourself over to the insurance company so that if you are at fault, then the insurance company writes the checks to compensate those that have been injured with either physical damage or damage to property or lost income or whatever. So you transferred that risk from yourself to the insurance company. So insurance protects you and your business from exposure to financial risk, and it makes whole your customers, clients, employees, vendors, and contractors. There are numerous types of insurance products, coverages, and endorsements. Now, this list on this page and the one on the next page is by no means an exhaustive list because there's so many others out there. But we're going to talk about a few of them. All right, a few of them might be general liability, product liability, professional liability, commercial property, commercial auto, builder's risk, business interruption, bond insurance, workers' comp, common carrier, flood insurance, umbrella coverage, key person life and health, and employment practices liability. Some of the others that I may not have on this list might be in event insurance. So let us first talk about general liability. Provides coverage for liability exposure of property owned or occupied. So if you own a building, you got insurance on it, part of your insurance is going to be for liability on the premises. Okay, but with general liability, you're also going to have coverage relating to business operations, whether on site or off site. And it may provide some contingent coverage for the protection for the acts of others, such as independent contractors or vendors that you may have working with you. So that's general liability. Next, product liability coverage provides protection for damages resulting from faulty products. It protects sellers as well as manufacturers from these liability losses, and it makes whole the injured parties. So if you're looking at this slide, there's a busted out tire. Years ago, Firestone had problems with his tires blowing out, and people got in accidents, people were injured, unfortunately, even some people died. Well, Firestone was responsible for all of those damages, and luckily for them, they had product liability insurance. More recently, Toyota, you may recall, had a problem with his cars all of a sudden accelerating. And again, people got into accidents, people were injured, and unfortunately, even some people died. This right here, this article from Insurance Journal from February 2013, says that Toyota finalized a suit, a multi-state suit for $29 million. Now, this was only a part of a total of, check this out, $1.1 billion with a B. Can you imagine what would have happened to Toyota if they had to pay that out of their reserves, out of their operating capital? They probably would have gone bankrupt. But because they had product liability insurance, the insurance carrier stepped up and paid out those claims. So those are examples of product liability. Commercial property insurance. Similar to your homeowners, it provides coverage for damage to the structure as well as contents, and it also provides you with general liability on the premises in the event somebody's injured on the premises. And whether you have whether you own the building or not, if you're leasing, then you're going to have a commercial renters policy. All right, which will provide you with coverage for your contents, but also provide you with some liability coverage on the premises for those areas that you are responsible for. Other areas will be the responsibility of the owner of the building if you're leasing. Okay, builder's risk insurance is a special type of commercial property insurance, and that is for those buildings and so forth that are under construction or under major renovation. It provides protection for the interests of a building owner, contractor, or subcontractors. The coverage is based upon the completed value, and it continues during construction and automatically terminates when the structure is either completed or occupied. The thing is, you can't get insurance other than builder's risk on a building that's under construction. All right. So you need some type of protection. Why? Well, here are a few scenarios. Let's say the first scenario might be you're in the middle of construction, and let's say a storm comes through and blows down everything that's been built up. What do you do in that situation? Do you have to go back to the bank to borrow additional money? Do you have to come up with the money out of your pocket, or would you rather file an insurance claim? Another scenario might be, let's say you're in the middle of construction, and let's say a set of knuckleheads decide they want to do some vandalism, and they go and they break up everything that's been built up so far. Again, what do? You go back to the bank to borrow additional money, you come out of pocket, or would you rather file an insurance claim? A third scenario might be, let's say you're in the middle of construction, and let's say you have materials delivered to the job site. And let's say another set of knuckleheads decide they want to back up a truck and steal all of the materials. Again, what do? Go to the bank, reach in your pocket, or file an insurance claim. So those are some scenarios where builder's risk insurance would be important. Okay, commercial auto insurance provides liability protection for vehicles used in the business, provides coverage for damage to business-owned vehicles and the vehicles of others, and it provides coverage for employees driving business vehicles. Let me emphasize a couple of points here. Number one, if you're using your personal automobile in your business, be sure to have a conversation with your insurance agent, because if you were involved in an accident using your personal automobile for business purposes, your insurance company would be well within their rights to deny a claim if they didn't know you were using that vehicle for business purposes. So it's important to have that conversation with your agent, because one of two things are going to happen. One might be they have to sell you a commercial endorsement to your private passenger policy, or two, they may just simply make a notation in the file and automatically extend your coverage. But it's going to vary by what business you're in, how frequently you use the vehicle, and what you're using the vehicle for. You know, if you're just going to Office Depot to pick up supplies, or going to Walmart, whatever, or picking up lunch from somewhere, more than likely they're going to say, okay, we'll make a notation in the file that you're going to use the vehicle for that purpose. But if you're doing deliveries or other things like that, then there's a chance you probably need a commercial endorsement to your private passenger policy. Something else I want to mention about automobiles, particularly your personal automobile. So many times people want to advertise when they're in business. And so you go and get this magnetic sign made and you put it on the side of your car, truck, van, whatever. Guess what? your chances of getting to an accident goes up exponentially because people are going to look at that as a commercial vehicle and they say, oh, I bet you they have high insurance limits, that they have deep pockets because that's a business. And guess what? You're going to be hearing from Morris Bard or Dudley DeBosier or any of those other TV lawyers. Okay. So it's important to have that conversation with your agent. Your agent might just tell you, well, it may not be a good idea to put that advertising on your personal automobile, but have that conversation with your agent. Okay, common carrier insurance is a special type of commercial auto insurance, and that is insurance that provides liability coverage for those entities that transport people, products, and goods on behalf of others. So if you're being paid to transport people, products, and goods, then you definitely need to look at common carrier insurance because you are responsible for whatever that you are transporting while it's in your care. And so if you transporting some products on behalf of a manufacturer and something happens to it, you're responsible for replacing it or compensating them for that, for damage to that property. So you would need common carrier insurance. So entities such as bus companies, trucking companies, airlines, taxis, limousines, delivery services, you name it, they would definitely need to look at having common carrier insurance. Professional liability insurance provides coverage for the actions of professional individuals performing a task. Lawyers, doctors, accountants, insurance agents, investment advisors, consultants, all of those kind of folks would definitely need to look at professional liability insurance. It also provides protection for those serving in business organizations such as officers and directors. And we'll provide coverage for errors and omissions. So let me give you an example. Let's say you are preparing taxes. And if you make a mistake on somebody's tax return, which causes them to owe additional money to the Louisiana Department of Revenue or to the Internal Revenue Service, guess what? They're gonna want to sue you in order to get their money back, to be made whole again for your mistake. So it's good idea to have professional liability insurance in the event you make a mistake or you cause an error or you omit something. So that's called professional liability insurance, sometimes also referred to as malpractice insurance. Okay, flood insurance. I don't think we need to spend a whole lot of time on this because we've learned our lessons over the years that when it comes to rising water, okay, that is not covered by your commercial property. All right, you have to have a separate policy to cover damages resulting from rising water. Now, if you have a hole in your roof and it floods your business, well, then that's covered under your commercial property. If you have a pipe that bursts in a wall, then that's covered under commercial property. But if it's from rising water, meaning the overflowing of a ditch, river, creek, lake, whatever, or torrential rains, you definitely will need to have flood insurance. And if you're in an area that is prone to floods, you definitely need to look at getting flood insurance. Okay, home-based business insurance. If you're operating out of your home, pay close attention. You probably may need to buy a business policy or a business endorsement to your homeowner's policy because your homeowner's policy may not cover business equipment, inventory, or supplies that you may have at your home. Your homeowner's policy may not cover liabilities resulting from the home business. And your homeowner's policy may not cover that portion of the home that's used for business. So let me elaborate with a few examples. Let's say, oh, you're preparing taxes out of your home, and one of your clients comes over to either drop off the information or to pick up their tax return. And let's say they trip over one of the kids' toys in the yard and they fall and break a leg and they have to have surgery. Guess what? You're looking at $10,000 that you're going to be responsible for if a person breaks a leg and have to have surgery. So, because your homeowner say, insurance company may say, well, we didn't know you were operating a business out of your home. So too bad, so sad. You're not covered for this. Okay. So it's important that you have a conversation with your insurance agent to let them know you're operating a business out of your home. And one of two things are going to happen. One, they may have to sell you a commercial endorsement to your homeowner's policy to cover business related activity and business related items. or they may simply make a notation in the file and automatically extend your coverage. Again, it's going to vary by what company you're with. It's going to vary by what business you're in and how much activity you're going to have at your home. Okay. Another scenario, let's say you have a fire at your home and the insurance adjuster comes out and says, okay, this is the living room, this is the kitchen, this is the bedroom. What's this? What's all of this stuff in this room? And you say, oh, that's for my business. And they may say, well, I don't have anything here saying you're operating a business out of your home. So this room is not going to be covered. Anything in this room may not be covered. None of your equipment, none of your furniture or supplies, inventory, none of that's going to be covered. So you need to have that conversation with your insurance agent. Okay, workers' compensation insurance, state mandated coverage if you have employees. It covers work-related injuries or illnesses. It provides coverage for lost wages of the injured or sick workers. It covers injured or sick workers' medical expenses as well as employer liability. Let me put an asterisk right there. Okay. Because one of the things when it comes to workers' comp, you have to provide a safe working environment. You have to have protocols in place to make sure that you do everything you possibly can for the safety of your employees. Okay. The good thing about workers' comp insurance, a lot of times the company will come and inspect and maybe give you suggestions on how to provide a safe working environment. That's part of the service that they provide. Okay. And then periodically they may come and review to make sure you're providing a safe environment. So, for example, let's say you got an extension cord running across the floor. Well, the workers' comp company may say, hey, in order to avoid somebody tripping, particularly an employee or maybe even a client or customer, you might want to tape that down to make sure that they don't trip and fall and injure themselves. Okay, so, but if you fail to provide a safe working environment, the workers' comp company would be well within their rights to deny paying a claim. The benefits are determined by the state and typically no policy limits. The premiums are based upon the total payroll and the job classification of the employees. Okay, so with that being said, let me emphasize this point that you properly and correctly classify your employees because the insurance company may deny a claim if you didn't do that correctly. All right. Give me an example. I had this business owner contact us complaining with a complaint against their insurance company, workers' comp insurance company. Well, lo and behold, he classified 5 of his 8 employees as clerical. Now, only one computer in the whole business. All right. And so he tried to say they were all clerical when they weren't. All right. And so the insurance company, they denied the claim. Or what they could do, they could deny the claim and then cancel the policy and have you go somewhere else. So you need to be aware of that. There may be some instances where independent contractors or subcontractors may have to be covered under your workers' comp. Also realize that employers are subject to periodic audits, and some contracts may require that you as the owner have workers' compensation insurance on yourself as well as any employees that you may have. Okay, employment practices liability. I added this probably about 3 or 4 years ago to this presentation because of the current environment we're in. With the anti-Semitism, anti-LGBTQ, and heightened racial discrimination. The employment practices liability insurance provides liability protection for defense costs and damages related to employment-related claims. Claims such as wrongful termination, discrimination, workplace harassment, and retaliation. So if you have employees, you definitely want to look at employment practices liability in the event of some type of situation occurring. Okay, business packages, commonly referred to as business owner policies. And what these policies do, they combine several types of coverages all into one package, which is good because it saves you money and you only have to deal with one insurance company. And so the contents may include some general liability, some property coverage, business vehicle coverage, workers' compensation coverage, and electronic data. There are some policies or packages that are designed for specific industries. So if you have a service business, there's a package for that. Retail storefront, there's a package for that. Construction or home-based business, there's a package for that. Just like with your home, like with your automobile, for example, you have a combination of not only liability, but if you got full coverage, you're going to have liability, you're going to have comprehensive, and you're going to have collision. Okay, all wrapped into one policy. So that's kind of the way a BOP policy is. A lot of the coverages that you need would be placed into one policy, which again saves you money and allows you to deal with only one insurance company. Okay, business and key person insurance. Loss of key personnel can be devastating to a business. So you need to look at perhaps life and disability insurance on those key individuals. Policy provides coverage for losses related to the death or incapacity of key personnel, and the business is usually the owner and the beneficiary of the policy. So let's talk about this a little bit. Let's say you have a restaurant and you employ a chef, all right, who has the cooking skills, they got the recipes. I mean, they play a significant role in the success of your business. All right. If something happens to them, what are you going to do? Will you have the resources available to replace them or to contract with somebody to come in and provide those services? Hey, they may not come cheap. And so you may not have the resources, but if you got key person insurance, then you receive the proceeds from the policy and then use that to bring on the key person, another key person that you're going to need. Another scenario might be, let's say you have business partners. And let's say something happens to one of the business partners. Let's say they die. All right. Well, their family is going to inherit their interest in your business. And the thing is, you may not want them involved in your business because they may try to pressure you to cash out. They may pressure you to sell in order for them to cash out, or any other scenario, or they may just try to take over the business. Well, with key person life insurance, you use the proceeds and you buy the family out. Okay. And then that way you can preserve your business. Okay. So those are just a couple of examples where key person life and health might be beneficial. Okay, business interruption and extra expense coverage. This particularly comes into play when there's been a major disaster or a fire. All right. So it provides coverage for loss of income caused by a disruption of business activity. The disruption may be as a result of damage to the property occupied by the insured, occupied by you, or damage to another's property, such as another tenant in an office building or in a strip center. So let's take, for example, you operating out of a little strip center, and let's say one of the businesses has a fire. There are 4 businesses in all, but one of the businesses has a fire, totally consumes that business. However, you perfectly fine. You could operate. However, the fire marshal said, nope, this is a hazard. We're going to have to shut down this whole thing for a while. Okay, what do? You got bills to pay. You got employees to pay. You got clients and so forth that you need to service. Well, if you have business interruption coverage, you could get assistance to pay your bills until you become operational again, or you can get assistance to move into a temporary location, or assistance to move into a new permanent location. So it provides coverage for expenses relating to the temporary relocation of a business and provides coverage for extra expenses incurred by a business as if the disruption had not occurred. So many those businesses that I talked about early on after the hurricane, when they said they didn't know what they want to do because they didn't have the right insurance, 9 times out of 10, it was this business interruption and extra expense coverage that they did not have at the time. So make sure you have that type of coverage, particularly those of us in South Louisiana, where we're subject to hurricanes, tornadoes, and other types of severe weather conditions. Okay, umbrella coverage is a liability policy written in conjunction with other liability policies. It provides liability coverage over and beyond primary policy limits, and it may provide protection for some liabilities that are not covered by your underlying primary policies. So First of all, you just can't go out and buy a an umbrella policy. You have to have other liability policies in order for the umbrella to be applicable. So, under the umbrella policy, you may have your commercial auto, you may have your general liability, you may have professional liability, or some. You got to have some type of liability coverage underneath the umbrella. So the way it works is that let's say you have general liability of $1 million. All right. However, and that's what you need on a regular basis. However, there may be that rare instance where your exposure may exceed the $1 million of general liability. So rather than buying $2 million or $3 million that you don't need on a regular basis, stick with the $1 million and get an umbrella to cover the excess liability. So it's also referred to excess liability coverage because the underlying policy is going to pay first. All right. And if there's anything above that, that's when the umbrella policy kicks in. So again, you can stick your commercial auto, you can stick your general liability and professional liability underneath that umbrella. Okay. To provide you with that extra layer of protection. So think of it in these terms. Let's say it's pouring down raining outside, and your first line of defense might be to put on a raincoat, rain hat, and maybe some boots. All right. But you say, well, it's really storming out there, so I need an extra layer of protection. So what you do, you open up an umbrella that overlaps your raincoat, your rain hat, and your rain boots. Okay. So that's an umbrella policy. Okay, we're going to shift gears a little bit and talk about a different type of insurance product, and that is a surety bond. All right, surety bonds are contracts by which one party, the surety, agrees to make good the default of another, the principal. Okay, so the three parties that are involved are the principal, one who has primary responsibility to perform an obligation. So that would be you, your business. All right, the surety would be an insurance company that guarantees that the principal will perform or fulfill the obligation. And then the obligee might be the city of New Orleans, who may say, hey, yeah, we'll give you this contract, but we really would like for you to be bonded. All right. And so the city of New Orleans might be the obligee, the one who receives the surety or the guarantee that the principal will perform. So this is how it works. You get a contract with the city of New Orleans, and let's say you default on the contract. Well, the city's going to have to find somebody else to come and finish the job that you didn't finish. And that may involve additional money. So what they're going to do is contact the surety company and say, hey, look, give me my money so I can hire somebody else to come and do this job because your client did not complete the job. So that's the way a surety bond works. So what are the qualifications for a surety bond? Well, a surety generally looks at the following criteria. One, capital, determination if the principal has sufficient funds and credit to finance the project or other work, meaning that do you have the monies to get started on the project? But if you need an advance, but then probably you're not going to get a contract and you definitely won't get a bond. Capacity, determination if the principal has the skills, experience, staff, and equipment to perform their work. And then finally, character, determination if the principal has the reputation for honoring agreements and meeting obligations. Have you completed jobs in the past? Have you completed them on time? Have you completed them correctly? They're going to look at your character as far as whether or not you've been able to complete work that you've been contracted to perform. So there are numerous types of surety bonds. Bid bonds. That is a bond required of a contractor submitting the lowest bid on a project. The bid bond pays the developer the difference between the lowest bid and the next lowest bid, plus any other expenses resulting from the principal's default. So let's say you submit a bid on a contract, and let's say with the city of New Orleans, all right, and all of a sudden you say, oh, I can't do it for that price. So then the city of New Orleans may have to re-advertise. They may have to do something else. They incur costs. And so they may require that you post a bid bond, meaning that if you can't do the project for that amount, but then they get to go to the surety company and say, hey, give us some money so that we can recoup our expenses for putting together this bid. Because there's some bids that require a lot of work to put together. They may involve engineering costs or architectural costs, legal costs, advertising, public advertising of the bids. And so the last thing the city of New Orleans might want is for somebody to be the lowest bidder and then say they can't do it for that price. Performance bond that guarantees the performance of a contract by the principal. That's the early examples that I use. And then the completion bond is a bond that provides coverage to a mortgagee, usually the lender, that a project will be completed by the mortgagor, usually the borrower. A lot of times you see this type of bond when a contractor may do spec building. You know, they may build a shopping center, all right, without having pre-leased any of the spots. I mean, they figured out, hey, if I build it, they will come, all right. And so the bank may say, hey, look, we want to make sure you complete this project, so provide us with a completion bond. Same thing with developing a subdivision or building an apartment complex. The bank wants to make sure that you complete the project. Oh, a contract bond, similar to a performance bond. Fidelity bond, a bond that provides protection for the dishonesty of employees, such as with a company might do janitorial service. And, a lot of times after hours, they go into a business and they have access to maybe some valuable information, sensitive information, or valuable items in the office. And so if any of those things end up being broken or stolen, then the fidelity bond will kick in and compensate the one who receives it. A payment bond, a bond guaranteeing that a contractor will pay fees owed for labor and materials. A lot of times you see these on big projects to make sure that contractors and subcontractors are paid, and that materials are paid for through the suppliers. All right, we're going to shift gears again and talk about dealing with your agent. Number one, make sure your agent is properly licensed, and you can do that on our website where it says find agents. Check with your state regulator, that is us, to see if there are or have been any complaints against the agent. Check to see if your agent has any special industry designations. A lot of times when you look at an insurance agent's business card, you may see these initials, CPCU, meaning that they are a chartered property casualty underwriter, meaning that they've taken these courses, they passed the test, and they fulfilled their continuing education requirements in order to maintain those designations. Be sure the agent fully understands your business. So that may mean they have to come out and see your business, see your operation, whether on-site or off-site or both. Read your policy or policies. Ask your agent questions about the policy and any potential exposures that you may have. Ask your agent about items that are excluded from the policy and about deductibles. You know, those are two areas where people are surprised the most, when they find out something is excluded or they find out what the deductible is. And particularly with commercial property, the deductible on a commercial property policy for hurricanes and those types of storms, that deductible may be 3% of the insured value or 5% of the insured value. So let's take, for example, that you have a building that's insured for $200,000. All right, a 5% deductible on a $200,000 $200,000 building would be $10,000. All right, that comes off the top on a claim. It doesn't matter how much damage you have. That's $10,000 that comes off the top. So you need to be aware of that, and you need to be prepared for that. Ask your agent how a potential loss will be handled, and then consult your agent before filing a claim. So many times folks make mistakes or they miss out on benefits that they may have access to. So it's good to check with your agent before filing a claim, and then periodically review your coverages, perhaps yearly, because as your business grows, your insurance needs are going to change, and you want to make sure that your insurance keeps up with your business. Okay, the declarations page, which is a part of the insurance policy, but it summarizes your coverage. It describes the property that's insured. It lists the coverage that's provided and the amounts. It lists any items that are excluded. Remember, that's one of the areas where people are surprised the most. It lists any mortgagees, if any. It states the amount of the premium and the fees. It lists the deductible amounts. That's the other area where people are surprised the most. It lists the coverage forms and endorsements that may be attached to that policy. Then it states the policy period, lists any co-insurance percentages you may have, it lists any optional coverages that you may have, and then finally, it lists the name and contact information of the agent and the name of the insurance company that's underwriting that policy. So that is it. And so I'll be glad to entertain any questions that you may have. And here is my contact information.
Thank you so much, Mr. Patrick, for such an informative presentation. Once again, if you all have any questions, please drop them in the chat. We're doing a last call for all questions. Please place them in the chat.
So while we waiting to see if there are any questions, let me just mention a couple of other things. One might be event insurance that I didn't cover, but event insurance is insurance that provides you with coverage in the event an event is canceled for whatever reason. Take, for example, let's say you're going to be a vendor for the Essence Festival, all right, held in July. Well, that's hurricane season. And if the Essence fans, let's say you invest in equipment, invest in supplies, invest in merchandise that you might be selling or food that you might be preparing and selling and so forth, and all of a sudden the event is canceled, that's a huge loss. All right, because you're not able to sell any of those things. But if you have event insurance, then you can get assistance with recouping the losses associated with that. Something else I want to mention with regard to insurance. A lot of times, somebody you contract with may tell you, okay, these are our insurance requirements. All right. And they may say, okay, you need general liability of $1 million. Please don't think that's the only insurance you need. They may say that that's the only insurance you need in order to do business with them, because they want to make sure that that they are protected and the general public is protected from you. But they don't care about whether or not you are protected for your business or for yourself. All right. That's why it's important to know your risk exposure. That's why I went through all of these different types of insurance coverage. And the reason, because we had a person who filed a complaint against an agent because they called up an agent. They went to see an agent rather, and they said, okay, I just got my license to do business for the state, to operate for the state. And they say I need $1 million of general liability. So the agent, doing their, being a good agent and doing their fiduciary duty, they were asking questions about the person's business because they were trying to ascertain what their exposures might have been for the business. And this person got offended and said, no, you don't need to know anything about my business. You just need to sell me a general liability policy. And the agent kept trying to say, well, no, I'm not trying to get in your business. I'm trying to make sure that you are adequately covered for all areas of your business. All right. So, so the person filed a complaint with us, and, we got back to them and saying, hey, this is what the agent was doing. All right. So be aware that just because somebody said this is their insurance requirement, does not necessarily mean that you are going to be protected. All right. They just want to make sure that they are protected from you and that the general public is protected from you. Something else I want to share with regard to just being in business in general, and that is finding a trade association for the industry that you're in. I'm a big believer in trade associations because I think they add a lot of value. When I had my business decades ago, one of the things I did, I sought out the trade association for the business that I was in. Well, I didn't have I've used all my money to get started, so I didn't have money to join. However, what they did do was put me on the mailing list for their monthly magazine. And the first issue of the magazine I got, I looked through it and I found a vendor for my inventory that was cheaper than the supplier that I was already using. All right. Saved me a whole lot of money, added to my bottom line. But the other thing about it is the articles that were written in that trade publication gave me ideas about how to run my business. You know, because they gather information from all around the country. So what's happening in other areas, you know, I could have implemented in my area for my business. I was able to find a mentor business, you know, somebody I could just call, establish a relationship with and call and say, hey, how did you deal with this? Or how do you do this and whatever? Because you may not be a threat to them and they may not be a threat to you. They're more willing to share information. And so these trade associations provide that value through their publication. Nowadays, they don't send out a monthly magazine, but they do send out email updates or newsletters via email. All right. And it's important to read those emails and look at the ads. You may find a vendor for some of the products that you need through that trade association. And again, you may can identify a mentor company that you can, you know, somebody who's been in the business a lot longer than you to help you with running your business and coming up with ideas to make your business more efficient. The other thing about trade associations is that they lobby on your behalf. They lobby the Louisiana legislature, they lobby Congress on any legislative changes that could impact your business. And so they bring value that way. So I encourage you to explore trade associations for the industry that you're in. Also, I think it's important that you establish a relation. If you're in a business where you're regulated by a governmental entity, it's good to have a relationship with that governmental entity that regulates you, because we regulate the insurance industry in Louisiana. So that means the insurance agents, the insurance companies, the claims adjusters, bail bondsmen. We much rather answer your questions than to slap you with a cease and desist order or to fine you for any mistake that you may make. So having a relationship with the regulator for your industry is a good thing to do. And of course, other relationships that are important are, you know, have a relationship with an accountant, have a relationship with an attorney, have a relationship with your insurance agent, have a relationship with a banker. All right. All of those are key relationships you need to have for your business. I'm also a big proponent of chambers of commerce because they put you in contact with other business owners that you can possibly do business with. When I had my business, I was a member of the Thibodaux Chamber of Commerce. That's where I'm from originally. All right. And I was able to do more business with other business Chamber of Commerce members than because of that relationship, attending the functions and so forth. It opened the door for me to do business with them. So I'm a big proponent of chambers of commerce as well. So those are just some of the tidbits that I wanted to share with you. So any questions?
It looks like there is one question. It says, do you recommend getting business insurance with the same company as homeowners insurance, or is it best to do it with a separate agency?
No. You can go with the same. Matter of fact, it might be better because you already have an established relationship with that agent for your homeowner's insurance or whatever insurance that you may have. And if it's something they can't handle, they probably would refer you to somebody who can handle it for you.
All
Good
right. Well,
question.
yeah, I think that is actually our only question. So I think that means you covered it all. So I do want to thank you again, Mr. Patrick, for joining us today. This was a wonderful presentation, and we really do appreciate you. And for our attendees, we will be having a second session today happening this evening. We'll be joined by Ms. Jo Lawrence with the SBA. She'll be talking about financial assistance. So if you haven't, make sure you sign up for that one as well. It's happening at 5 o'clock today. Thank you all once again for joining and have a great day.
Thank you.